1/3 of the US workforce are freelance workers, and this number is expected to go up by 50% in the next 5 years. Now, it's easy to see why people are turning into side work. You're in charge of your time, your income, and expenses. That is why in this video, we'll be sharing tax hacks specific to freelancers. If you want to keep more money in your pocket, like, subscribe, and keep watching. Hack number 1 is know your tax deductions. Deductions are the holy grail for small business owners because of the sheer amount of tax savings they provide. And as a freelancer, you're basically a solo run business. Now, just for anyone who's not familiar with tax deductions, these are expenses that reduce your taxable income and ultimately your tax bill. Basically, you deduct them from your adjusted gross income right before applying the federal tax rate for your income bracket. Let's say, for instance, you spent $10,000 on office equipment and your AGI is $100,000. You could subtract the office equipment cost that brings your new taxable income to $90,000. Now, that's out of the way. The next logical question is, what tax deductions can you take as a freelancer? So first of all, the freelancing industry is broad and not every gig will incur the same kind of expense. However, let's talk about some more common ones, like for startup costs. As a freelancer, you probably own a website or are on a platform that connects you to your clients. You may also have a logo and distinguish and market your brand. And at some point, you may even decide to open a LLC to separate your business from yourself. All of these are startup costs that you can actually deduct from your tax returns within the first year. That said, if you're on a freelance platform like Upwork, for instance, rather than your website, you can deduct membership and service fees as business expenses. You also have work equipment, so you work from a computer, phone, camera, mic, desk, and chair. All this counts as work equipment. And since they do add up to your business expenses in the year you buy them, you can absolutely deduct them from your taxable income. Of course, as long as you're using a piece of your equipment for your freelance work, you also have workspace or a home office. Most people know that the office space is tax deductible. However, most freelancers work from home, which means that they don't have the traditional office setup. The good news is you can deduct your home office or workspace as an expense in your tax filings. It's actually easy to do. Simply calculate the square footage of your home office occupies as a percentage of your home office total square footage and apply it to your rent, mortgage, and also other items to figure out your deductible expenses. I will give a pro tip here. The IRS defines a home office as a space exclusively used for work. So working on your couch 4 or 5 or even 8 hours a day and using the space for personal stuff, the rest of the time does not count as a home office. You also have utilities. So as with your home office, you can also deduct a part of your utilities that you specifically use for freelance work. This could be things like internet costs, phone bills, and so on. However, keep in mind that you need to know how much as a percentage of the utility in question you're using for work. You also have data storage costs. This is something a lot of freelancers probably don't know, yet it is without a doubt one of the easiest expenses to track. If you're using a paid storage service to keep your clients' data or even personal data related to freelancing business that you're running, you can actually subtract the fees you pay as a business deduction and of course save a few bucks. You have your mileage. So as an independent contractor, you may also need to use your car for work. For instance, dropping off items you sold on, say, Etsy to your local post office for shipment to clients. In this case, you can and should claim the mileage incurred on your tax return. Remember though, with a personal car, you can only deduct the cost for its business use. Now, if you're selling a product online and using something like Shopify or Stripe to process customer payments, then you definitely need to spend some money on these accounts. The good news is that this is considered a business expense, which means you can track these costs and actually deduct them once it's time to file those taxes. You also have your payment processing fees, software expenses. So a lot of these freelancers need software to provide the kind of services they do. We're talking about tools like Adobe Creative Suite, Microsoft Office, Dropbox, Canva, Photoshop, and so on and so on. Most of these programs will require you to pay a regular subscription fee to use or access certain features. These fees are deductible as business expenses. That said, there are a bunch of other miscellaneous expenses such as educational subscription that you need to stay relevant in your industry, travel, business credit card interest, business loan interest, and home office supplies that you could use to lower your tax liability. So much in taxes. I hear business owners ask me all the time, Jonathan, how can I lower my taxes and pay the least amount of taxes possible? Or how can I scale my business past 6 figures? Right now, for a limited time, I'm offering a free tax strategy session where I'll be going through your 2 years of your past tax returns to see if you're overpaying in taxes and give you some free tax strategies to use to lower your taxes by 30%. Also, I'll throw in my free ebook on the top 10 tax deductions for real estate investors and small business owners, along with your tax strategy. Click the link below to schedule your free tax strategy session now. Let's get back to the video. Hack 2 is don't forget your tax credits. Even though tax deductions can save you a ton of money on your tax bill, you don't want to forget about tax credits. More so if you're making most or all your money from your online business. You see, tax credits are deducted from your tax bill, which means they reduce your tax liability directly. For example, if your tax bill for 2024 is $6,000, $1,000 in tax credits will reduce it to $5,000. Now, there are no tax credits specifically for freelancers, but that doesn't mean you don't qualify for the ones that are there. Examples include earned income credit for low income earners, the child tax credit for individuals with underage kids, and the opportunity tax credit, which is for educational expenses. Hack 3 is max out your retirement contributions. Just because you're not working for yourself doesn't mean you don't need to make retirement contributions. That's why we need solo 401ks, SEP, and simple IRA plans. The good thing about saving for retirement with these plans is that you're not only investing money for your old age, but are also saving on taxes. Remember, you'll be deducting those contributions from your pre-tax dollars, which reduces your tax liability now. The solo 401k for one has a pretty decent contribution limit, which is $69,000 in 2024. With proper retirement planning and deductions, you can actually pay almost zero tax on your gig income. Hack 4 is pay your quarterly estimated taxes without fail. So if you recently transitioned from regular employment to freelancing, you probably don't know that you actually need to pay your taxes regularly and not one go when tax season rolls by. And that's why, because employers typically withhold some part of your pay for tax purposes every pay period. Now that you're your own employer, it's upon you now to submit your taxes to the IRS. But since you can only know how much your tax bill is at the end of the tax year, you pay what's known as estimated tax payments, and this should be done quarterly, that is every 3 months. So how much should you pay? The rule of thumb here is to pay about 110% of your previous year's taxes. So simply divide that by 4 to get your quarterly payments. Alternatively, you can use the IRS form 1040-ES to calculate this, but you don't want to make the mistake of missing these payments, as you might get penalized. Final hack 5 is keep accurate records of your income. So there's no way you're going to accomplish these 4 hacks we talked about when you don't really know how to keep accurate financial records of your freelancing business. In fact, poor record keeping is one of the surest ways to lose money when you're filing Form 1099, or worse, get in trouble with the IRS. Unfortunately, this is a mistake a lot of freelancers make. Make sure you record not only your income, but your expenses too. Keep receipts and transaction records, and to save yourself the headache of organizing everything, find a tool that will help you. Aside from not keeping records, you also want to avoid waiting until tax season to start preparing your taxes. Scrambling at the last minute is how you end up with errors, missed income, and a ton of other problems. Start preparing your taxes early. Failing to report all your income, so this is a mistake that's very easy to make as a freelancer, but it can turn out to be very costly. Also, math errors. Make sure that your figures are very accurate, and more importantly, avoid neat figures. You know when all your numbers end with zeros, as these can be red flags with the IRS. So what are some tax hacks you learned in your journey as a freelancer? Share with us in the comment section. And make sure you also like, subscribe, and hit the notification bell for more practical tax tips for individuals as well as business owners. Thanks for watching and see you in the next video.